Welcome back everyone. In today's video, we're diving deep into the daily time frame and we're combining it with liquidity plus the candle range theory concept and how this candle range theory works in perfect harmony with the daily time frame. In this video, I'm going over my personal CRT method. It is not what you think, so stick around to see how I apply CRT to my actual trading. We're going through top-down analysis. We're going to include liquidity, how we can use liquidity in conjunction with CRT to have high accurate trading conditions. I'm going to share with you a complete entry criteria that you can start using today. And as always, I'm going to share trade breakdowns at the end of the video. So whether you're looking to refine your trading edge or just looking to add precision to your entries and exits, understanding the daily time frame is absolutely essential. So if you are struggling with finding directional bias, this video is one you do not want to miss. So how are we going to use the daily time frame with our trading? If you refer back to my daily bias video, I have shared a concept where if the daily time frame closes above the previous day's high, my expectation for the following day will be bullish. This high will be my draw on liquidity, but even if this high gets hit, my bias for the day is still bullish to carry on with the momentum of this market. In the same way that if this daily candle closes below the previous day's low, my bias for the following day will be bearish to carry on with the momentum of the market. Now, how are we going to use that? We are going to wait for the daily time frame to line up with our bias. So if we see that this market is running bullish and we get a daily closure above the previous day's high, then I'll look for longs only in this day. If the market direction is bearish and we can see that we have a very strong bearish closure below the previous day's low, I'll only look for short setups in this coming day. Now, how are we going to pair the daily bias with liquidity in order to get highly accurate trading conditions? So, first of all, what is liquidity in the market? Liquidity in the market is just when the market consolidates and there's a buildup of buy stops and sell stops. Remember, if this market consolidates, breakout traders will have buy stops here to catch the breakout to potentially run higher. And if this market is consolidating, there will be sell limit orders here for people who have sold and with their stop losses above the highs. So you can catch both sellers and buyers out above old highs and old lows. So liquidity is every single swing point in the market. If you are still confused with what a swing point is, a swing point in the market is a 3-candle pattern where the middle candle, the wick, is the highest wick between the 3 candles. That is a swing high. The same way, a swing low is when we have a bearish candle and we have a bullish candle, and the middle candle has the lowest wick between the 3 candles. That is a swing low. So I want you to go ahead and mark out every single swing high and every single swing low on your chart. Now, how are we going to pair liquidity with daily bias? Let's say, for example, we have a swing low here. I want to see this market run sell side liquidity or this swing low and then close bullish. Then I want to see a bullish candle, a bullish daily candle, close above the previous day's high. And when these two criteria get met, that is when I'll look for expansion in this candle. In the same way, I want to see a swing high get raided. So this will be buy side liquidity. I want to see buy side liquidity get raided and see a reaction off of that level. Then I want to see a confirmation of this reaction. So I want to see another daily candle close strongly below the low of the previous candle. When these two conditions are met, only then will I look to trade expansion in this next candle. So just to run over that quickly again, we want to see a swing high get taken with a very nice bearish candle. Then I want to see another bearish candle that closes through the low of this candle. Then I'll look to trade expansion in this candle number 3 in this range. So where does candle range theory come in? Candle range theory is based on the idea that every single candle is a range in price. Every single candle is a price range. So when we take out the high, we can trade the reversal. When we take out the low, we can trade the reversal. That is candle range theory. It's based on reversals. In general speaking, a continuation is much more easier to trade than a reversal. It's easier to trade with the momentum of the market than to spot the top or bottom of a market. Now, how do I apply candle range theory? Remember, it is a range in price. So, bringing back to that daily bias video and daily bias concept, that if we close strongly above the previous candle's high, this is a breakout of this candle's range. Normally, candle range theory will be when we take out this candle's high, we would look to trade the reversal. That is not how I want you to trade with this model, especially when it comes to the daily time frame. I want you to wait for a daily candle closure above the previous candle's high, and I want to see a strong closure above that level. That is a confirmation that we are breaking out of this range in price. So we are carrying on with the momentum of the market. That is where we are looking to trade expansion in this candle. In the same way, here we have the candle range low. Normally, if we take out the low, we would look for our market structure shift with a fair value gap. But this is a reversal. That is not how I want you to trade this. I want to wait for a strong body closure outside of this range. That confirms that price is in a trend, order flow is bearish, and we are trading with the big players in the market. If institutions is taking prices lower, why are we going against them? I wanted to trade with the flow of the market. If you're looking to trade alongside a professional trader with over a decade of experience, go ahead and check out the link in my description. It takes you to the Simplified Traders Mentorship program where I trade live in my Discord group every single day. And you can just look at the testimonials of the people in the group. People are getting funded, people are getting payouts. So if you are interested in trading alongside a professional trader with over a decade of market experience, go check out thesimplifiedtrader.com. If you are struggling to get funded, you can join my live trading sessions and trade alongside me, and I will trade with you until you get funded. Just have a look at all the benefits that's included with this mentorship program. And if you don't want to take my word for it, that is perfectly fine. Just look on our website to see what our members are busy saying and the feedback we are getting out of this program. We are honestly doing a difference. We have real members getting real results from trading. And I'm not promising you overnight success. I'm promising you that if you put in the work and you follow my guidance, I guarantee that you will become my next success story. So here we are on NQ or NASDAQ on the daily time frame. And remember, we are looking for liquidity to get taken out. Here we have that swing low, which is sell side liquidity. This market takes out the liquidity. Now what are we doing? Now we are looking to trade the opposite direction. The market has taken out sell side, so we are looking at buy side as my draw on liquidity. So I can go ahead and I can mark this out as my draw on liquidity. Now what am I waiting for? I am waiting for a bullish candle to close above the previous candle's high. Do we have that here yet? We don't have that, so we are still waiting. Here we have that previous candle's high. We are waiting for a closure above that candle. What do we get here? This daily candle closes above the previous day's high after sweeping liquidity. So clearly, this candle broke out of this candle's range. That is where the CRT aspect comes in. This candle closed above the previous candle's high. So now what am I doing? Now I'm anticipating expansion in this candle. Now I drop to the 1 hour time frame. And what am I waiting for now? Here we can see that previous day's high. I'm going to mark that out, previous day high. Put that in the middle. Previous day high. Here we sweep that liquidity. Now I'm waiting for a new order block to form on the 1 hour time frame. That next daily candle opens, at 5 p.m. New York time, what do? This candle opens and immediately trades lower. Remember, for a bullish candle, we want to see an open, low, high, close profile. So I want to see an order block form in the candle in this daily candle. When does that happen? That happens when we close above a down close candle. This is the formation of the order block on the 1 hour time frame, and that is where I can take my trade. Entry on the retest of the order block, stop loss goes below the swing. Remember, we have created a protected swing here. I don't see price action dropping down through that low. And also, as an added confluence, we are trading into these down close candles with an order block out of it. That is a very nice propulsion block. First target is a 2R. Let's see what happens. We're not tagged in yet. And price action runs away from us. You can see our bias was correct, but unfortunately in this example, price doesn't come back to retest the order block, and price action runs up to ultimately draw to our liquidity. Let's see if it gets taken. And there you go. Our liquidity point gets taken. I showed this example to show you guys that even though everything is done correctly, the market can still go without you. And that is where I don't want you to trade with FOMO, and I want you to stick to your rules. You can either take then a market execution and then target a 2R, but you're going to have to target a little bit further to get your 2R, and you're not going to get such a precise entry the way you should have if you took a retest of the order block. So what happens now? We missed that entry in this candle here. Now what can we see? We take out a swing high, so we've taken out buy side liquidity. Now I'm waiting for a candle, a daily candle, to close below the previous candle's low, which is what we get over here. This candle closes below the previous candle's low. So now I'm looking for expansion in the following candle. That is where I drop to the 1 hour time frame. And I want to wait for that order block to form again. Here we have that sweep. Here we have that previous candle, previous daily low that we have closed through. Now, what am I looking for? I'm looking for an order block to get formed, and then I take the retest of that order block. So this next candle opens at 5 p.m. New York time. What do we get? We are waiting for that order block to form. What do we have here? We have a green candle going up. I need a body closure below this point in order to form that order block. Do we have that? No, we don't. We have then a down close candle and then a bullish candle sweeping up liquidity. So as soon as we close through this up close candle, which we did in this example, in this case, that is the formation of a new order block. Now I can go ahead and mark that order block out. That is my new order block. I can either go ahead and take a retest of the order block, stop loss goes above the high, target a 2R, or I can take a market execution and then target a 2R. In this example, again, what do you see? We don't get a retest and the market falls to hit our take profit for a 2-to-1 reward to risk. So why am I showing you examples where the retest doesn't happen? Because I want you to start getting comfortable with taking market executions. That is how I personally trade. I always take a market execution. When it comes to my day trading model, with my swing trading models, I always take limit orders. Now, that is where your trading, your backtesting, your psychology comes into play. Is, are you okay with pushing a button and immediately seeing this market fall? Or do you want to place a limit order and wait patiently for this market to come and retest your order and then drop? Keep in mind that if you take limit orders, you might miss entries, but it's going to be more relaxed. So your mental capital will still be intact. That is why trading psychology is so important, and that is why I have an in-depth course just on trading psychology alone. So let's move on to the next example. Here we are just playing ahead. So now we had this trade here, we had that sell trade here, and now we are looking at this market to see what happens now. Let's play price forward to see what we get. if I move this thing up, what do we have? We have a swing low that gets taken out and this candle closes back into the range. Now, what does this candle do? This candle closes above the previous candle's high. So I can go ahead and look for expansion in the following candle. Now, dropping to the 1 hour time frame. Let's see. Here we have that liquidity sweep. Here we have that previous day's high that gets closed above. Now, the next daily candle opens at 5 p.m. New York time, and I'm going to wait for that order block to form within the candle that I'm trading. So we are waiting for a down close candle. What do we have? As soon as we close above this candle, our order block has been formed. Let's see what we get. We don't get that closure. We trade lower, so this moves down. We are waiting for that candle body closure above this line to get that valid entry. Let's see. There we go. Let's use a market execution on this example. Stop loss goes low below the low, and we can go ahead and we can target a 2R. Let's see how this plays out. Here we have a losing trade, so which is perfectly fine. That is where we go back to the daily time frame and we look for a new setup. Now, we have one losing trade, two winners, one losing trade. Now we are waiting for a body. Remember, we have already taken out sell side liquidity. Now we are waiting for that body candle closure above a previous candle's high. Do we get that? No, this candle doesn't close above the previous candle's high. Do we get that still? No, we don't. Waiting again. Do we get that? Yes, we do. This candle closes above the previous candle's high after we have swept out liquidity. Now we can drop again to the 1 hour time frame and we can wait for the market to align. We are waiting for that bullish order block. That's going to happen when we close above this down close candle. Let's see. What happens? We close above that down close candle and we retest it. Stop loss goes below the low and we target a 2R trade. Let's see how this plays out. And we get another loss. You're not going to win every single time in trading, guys. Now we go back to the daily time frame. Let's see. We are still waiting for that daily candle to close above the previous candle's high. Here we get that daily candle closes above the previous candle's high. Now what do we do now? Again, we drop back to the 1 hour time frame. And why do I keep going back to the 1 hour time frame? Because we have swept out sell side liquidity on the daily time frame and we are waiting for the daily closures to close above the previous candle's high to trade with the momentum. So here we get that previous candle that closes above the previous candle's high. This next daily candle opens at 5 p.m. This is a Friday, so a Sunday. Let's see. We are waiting for that order block to form. That happens when we close above these consecutive down close candles. That will be my change in the state of delivery. So we are waiting for that to happen. What happens now? We get that green candle, which is our bullish candle, and two consecutive down close candles that takes out liquidity. So where does my change in the state of delivery point move to? This moves down to the opening price of these two consecutive down close candles. Do we get that body closure above? We do. So we can go ahead and take a market execution. Stop loss goes below the low and we can target a 2R on this trade. Let this thing play out. And there you go. We hit 2R trades. So we had 3 winners and 2 losers. Now we are targeting a fixed 2R with you can always leave a partial running until you hit buy side liquidity. But just for this example, we have only traded with a 2R position. So let's see. We had plus one trade, minus one trade, minus one trade, and we had another winner. So we had 2, 4, 6, minus 2, we had 4% gained in 5 trades. So this is the reality of trading. You're not going to win every single time. The trading professionally is about having an edge in the market, and that is exactly what I cover in my trading mentorship. I've been doing this for over a decade, and I know exactly what it takes to have a lasting, proven edge in the market. So if you are looking to trade live with me on a daily basis, go ahead and look at this mentorship program. I trade live with you until you get funded, and I guarantee your success if you follow my guidance and you follow the course content. Guys, I hope you found this video insightful. I hope you found this video helpful. And if you did, leave a comment below. Let me know. Leave this video a like. Let me know what you want to see in the channel in the future. And I'll see you guys in the next video.